All right, today we are talking about the February 2025 market update. Let's jump in and look at some of the numbers from February. All right, again, this is a 5 county area. We look at Wake, Durham, Johnston, Orange, and Chatham counties, and we collect that data. So looking at new listings were actually up almost 1% for the month. 2,775 new listings hit the market in this 5 county area in February, up just a little bit from the same time last year. Now, closed sales were down 10.2%. So this has been a common story for the last several years. Transaction count has been down. So we had just under 1,700 closings occurring in February of this month. Again, down 10% from the same period last year. Now, median sales price is up 2.7% from the same period last year. So we're at about $431,000 as the median sales price. Again, I like to look at median versus average, although there's a place for both. But median takes a look at what does the typical person pay for a home, less likely to be influenced by outliers such as higher priced luxury homes that have made an entrance into our market over the last 5 or 6 years. In a bigger way than they had in previous years. So I like to look at that median price there. So of course you notice new listings are ticking up, although they're still down. We still don't have enough inventory. Closed sales, so number of transactions is falling, and yet median sales price is up. Again, somewhat just a product of not having enough inventory, even though buyer demand, there's a lot of demand out there, but not a lot of motivated buyer demand. So that's certainly having an impact on things, but we can see prices in our market are still holding firm compared to other markets in the country that are seeing significant price drops. The percentage of original list price to the price received. So this takes into account any price drops that may occur, not just that final listing price before it goes under contract. This looks at where it was originally listed. We're at about 98.9%, down just a little bit from where we were in February of last year. So you can see there's just a little bit more negotiating room this year than there was last year, although we're still holding pretty tight to that original list price. Inventory up a big number here. So this is the kind of headline numbers, the headlines that you'll see where we talk about inventory spiking. And you'll see inventory is up 28.1% year over year. So that makes for an eye-grabbing number. But when you look at the actual gross number of homes making up that inventory, it's 5,321 homes in inventory in a point of time when this data was taken in February. As you'll see in a minute, that's still way, way low. Does not come close to being enough inventory to account for the kind of demand that we have in our market. There's just so many factors influencing why transaction count is low, though. But despite inventory going up, we're not seeing prices drop because inventory is still low relative to demand. Month supply of inventory, we're at 3.1 months. Same period last year at 2.2. Wouldn't take too much stock in what this really means right now. 3.1 seems like a big number if you remember back compared to COVID times when we were below 1 month. But 3 month is still considered to be a seller's market, although we are approaching more of a balanced market. All right, then one of the favorite things I like to do is look back to the most recent time period before the shift that was caused by COVID. So we look at February of 2019, and you can see the inventory was almost 7,500 homes in February. And for those of you who were selling real estate back in 2019, you will remember that it felt like there were no homes for sale. Agents had these long lists of buyers that if they could find them a home, they would buy a house today. And yet there just wasn't enough inventory out there, not enough good inventory. And that's the way it felt even with almost 7,500 homes on the market compared to 5,300 homes here in February of 2025. And you can also imagine that the population has grown since 2019. So there are more people here. People are continuing to move here at high rates. And so where we are in inventory levels, regardless of the percentage increase year over year, we're still way underserved on our inventory. Let's look at the median sales price back in 2019, 289,000. And then one of the things I like to do is eliminate the spike that we saw in prices. We saw 40 to 50% price increase over 2 years during COVID. So what if we looked at just what normal price appreciation in our market would have done to house prices? And we look at normal as I'm putting normal in air quotes here at 5.5% appreciation. If we apply that over the last 6 years since February of 2019, then the median sales price would be 398,000, excuse me, just below 400,000. But as you can see up here, the median price sits at 431. So here's the deal. If home prices in our market stay pretty much flat for the next 2 years, then the lines will have crossed. So where prices would have been without the COVID spike will now, 2 years from now, match where prices are right now. So if we see prices stay flat in 2 years, you can make the argument that home prices are not inflated at that point. Now, there are other economic factors, wages, and how does wage growth keep up, what are interest rates doing, because that's going to impact the monthly financial obligations that homeowners and home buyers have. But you could make the argument that as long as we don't see rapid increase in pricing over the next couple of years, that home prices will no longer seem inflated, may still be a financial burden because of these other factors such as wages and interest rates, but home prices will be back in line with where they would have been without that kind of artificial, lack of demand driven spike we saw during COVID. And then let's just look new listings that were hitting the market back in 2019, up over 3,000, almost 3,100. Compared to what we saw in February of this year, just under 2,800. So not terribly different, though still a significant difference at a period of time where we're hoping to see more listings continue hitting the market. And closed sales were at 2,146 compared to 1,694. So that's way different, guys. I mean, that's less than 80%. This month, or February of 2025, had less than 80% the number of closings that we had in 2019. So, and again, as you can imagine, there are more people here. There are more buyers. There are more people that want to transact in real estate. It's just not translating into actual closings. That demand is there, though. And when we see a break in some economic factors that are holding back the churn that we hope to see in real estate in a healthy market, again, that demand is not going away. It's just kind of being pent up right now. So it'll be there for a future date. Just like during COVID, we borrowed closings, we brought closings forward. Right now, we're kind of kicking the can down the road, and we'll see a makeup of these transactions eventually. A couple more things I just want to show you here as we round out the market update for February 2025. Again, I like to look at the trend of inventory. So we want to see this. We want to see inventory climbing. Usually it's going to peak somewhere historically in our market in the April to June timeframe. And then we'll see it start to fall as we come through the end of the year. And then we start climbing again in January. So this is the trend we want to see. If you look back to last year, it was flat from January to February and then actually dropped in March. That's backwards. That's not what we want to see. So we hope that March is going to bring even higher inventory levels. We really want to see that continue to climb. So that we can make sure our home prices don't spike up again and that we're providing inventory for the buyers that are out there. Briefly on this new listings to closings ratio, again, I like to look at this. It doesn't mean so much at the beginning of the year, but as we start to get more data, year-to-date data, this number becomes more of a guiding number for us. But again, it's how many listings do you have to take in order to sell one? And so you can see during the peak of COVID, basically every house that went on the market sold. And when you see the height of the Great Recession, you had to list 2 or more homes in order just to sell one. So it kind of gives you an idea as to how painful does it feel for a seller. And right now, some sellers are selling their house first day on the market, multiple offers. It's still happening some, but we see more and more sellers sitting on the market longer, having to accept price drops, things like that. So you can see here, this is just a little bit of an indication, although still early in the year, that there is still some pain out there for sellers. And it's kind of an interesting market where one day it feels like a buyer's market. The next day it feels like a seller's market. This was 1.8 through January, 1.71 through February, and I anticipate it will continue to drop. We don't know where it will land. If I had to guess, I would say somewhere in the, around the 1.5 range is where 2025 will shake out. Again, just showing a little bit of a climb in terms of pain that sellers may feel. And then the last thing is just housing affordability. Again, remember this number represents how much money does the median family, the income that the median family makes relative to what they need to afford the median priced home. So in February, that's at 73. That means households are only making 73%. The median household is making 73% of what they need to afford the median priced home. 100 would be even, that the median income is exactly what you need to buy the median priced home. And if we look back in 2019, again, before COVID, this is January of 2019, we were at 139. Households were making 139% of what they needed to afford the median priced home. We've been in the 70s basically for all of more than the last 2 years. So don't know exactly what's going to bring us out of that. If there's one statistic you're going to look at to determine what's going to bring forward the health of the real estate market, it's this number. As it becomes more affordable, again, there's no lack of demand in the triangle market. It's just a matter of the buyers being motivated to buy and enough sellers being motivated to sell. But people still want to transact. There are just other economic factors that are holding that back for now. So that's all I got for you here in our February 2025 market update. Thanks for listening.